Hey, hello and welcome traders. Hey, it is September 22nd, and this year is absolutely flying by. So let's go over where the portfolio is, share some trades with you, share some trade ideas. I really want to go over what I'm doing right now. Things are going fantastic, having a great month. We're up, tw I think, over 6%, almost $20,000, I believe, in the main trading account this month. And the investing account's just going hog wild on our leaps and some of the other trades that we have on. So let's dive into it. Let's talk about our core trades. Let's talk about what we're doing. And again, hopefully you maybe get some ideas from this. Again, this is not financial advice. I am not a financial advisor. Okay. I'm just sharing with you for entertainment and educational purposes only what I'm doing. If you get some value out of it, great. If not, I at least want you to get some of the thought processes going in your head. So let's just jump into it and spend a little time on the account and what we're doing. So let me go ahead and share that with you. And let's just jump into the account here. So here you go. You can see this is our main trading account that we're in. And we wrapped up today with our delta at 640. Now, I want to be under zero point 0.2 delta, so 0.2% of my net lick on the delta. So we're pretty delta neutral. I'm actually underneath that level. I feel pretty good with where the markets are at these levels. I feel pretty good with these things at 640, and we've really been pretty consistently under that zero point 0.2. We haven't, been above it except for one or two times last month, and in good shape. All right, theta. So we're at 1,020 on our theta, which puts us at about a 0.28%. So it's a little bit light, but with VIX down so low and being dead as a doornail out there. When there's not a whole lot of volatility in the market, of course, your theta is going to be down. I would love to see it closer to 0.4 percent of my net lick, but I will take exactly where we are right now. And just to also share with you my Vega is a negative 441. So my Vega right now is less than half. It's 40% of my theta, which is awesome. So if you know the way I trade and you know that we're premium sellers, okay, and the more theta you add, typically the more vega you add, but we've really been able to neutralize that completely in our account. Negative 441, which is really small. All right, so we're talking about a vega of like 0.12 or something of our account. So it's really great, especially if you think the markets are overbought, the volatility could spike up or increase. That's what's gotten us in the past. We've solved that problem. We don't really have the Vega issue that we've had, but yeah, we're still generating great cash flow. Let's keep moving along on here. If you look at the net lick, 367, 780. All right, so we dropped what about $300 today, 200 and some dollars in net lick. It's all good. Most of that was on Bitcoin. So we do have IBIT and MicroStrategy or strategy trades going on in this account. So those took a little bit of a loss, but not much because their income, poor man covered call, or the dynamic income engine, as I call it, and because they're dynamic strikes that we sell, typically we're pretty close to at the money, sometimes in the money, maybe one or two strikes out of the money, but we're really holding on around that at the money strike. Well, when something sells off, it certainly gives us a bit of a cushion. Not only do we generate extrinsic value and gains from the extrinsic, which is the entire goal of the trade, but we also can protect against the downside. And if we start to look at what IBIT and Bitcoin are doing out there, at the money is about right, considering that the 8's above the 21, but we are below the 21, and we triggered a bearish PSAR today. And we've now got RSI falling below 50. So that means on probably the next roll or the next trade, we'll actually start selling further in the money strikes as opposed to at the money strikes, which is going to give us, again, more downside protection. We'll still generate the same great extrinsic as if somebody was selling out of the money, but I'm giving myself downside protection, which is why the portfolio holds up well, even on a day where Bitcoin or IBIT is down 2 to 3%. MicroStrategy or strategy is down 2.5%, and we didn't even budge today. All right, so uh, that being said, our net lick is in great shape. You can see we're up almost $20,000. Actually, I'm sorry, we're up 20,974 on the month in our net lick, 6.21%. Right, so 3% is our goal. We'll take the 6%, not too shabby out there. And our BP usage continues to remain uh, lower than normal. We're sitting here right around 49% of our BP being used right now. I'm pretty good with that. Uh, if we want to add trades, we can easily do that. We can clean up some BP quickly if need be. We have a couple spec trades on. They're all winners for the most part right now. We've got, let's look at the account. All right, let's just jump into that and see. So no sense me telling you. Let me show you what we're doing. So here's the account right now. Let me get off the screen. Maybe this will help a little bit. And you can see the overall portfolio today. All right, so we are in oil. We've got a strangle on. Oops, we've got a strangle on. This strangle's up 46%. So we take them off at 50%. So at any time now, this strangle is only a couple points away from coming off. It was up again today. Love that. And then we've also got a 112 trade on in oil. That thing's up 50%, 51%. It just moved on us right now. So that's doing great. Nothing to do here on oil. All right, on ES. So we've got our 112 trades on. So here's a naked put from one of our 112 trades. This is at 70%. Here's another one at almost 50%. And then we just put one on today because we took one off today. We closed our naked puts out. So we've only got three working, which again keeps our Vega down. That we've got three working on these calendarized versions of the 112. All of them are doing great. And then you can see all of these put debit spreads that we typically do further out in time. They're just sitting here for us. If the market starts to drop or fall, we can easily harvest these and use these for some gains if need be. But we're in really great shape. I love where we are on these calendarized. You just keep stacking put debit spreads that may or may never do anything. I'm okay with it. We're really just generating income off the naked puts here. Now, one of the things I wanted to point out here today was I think it really makes sense since it was a day where we closed the 112Cs. Want to go back and talk a little bit about how we're doing on these trades for the year. And we have put on 23 of these trades so far this year. We do them every other week. I've been pretty religious about doing that. 23 trades on this year so far of the 112C. We did lose four. That was two in March, two in April, when kind of things started to spike up volatility-wise and the market started heading lower. It was okay. We closed out four trades at losses, which were not too bad. We also closed out a couple extra put debit spreads for some gains to help offset those losses. But we are actually up. So we've won 19 out of 23 of these this year, despite a pretty good volatility spike and a sell-off in the middle of the year. And also, we're up now almost $20,000, 19,173 so far on these. So I just wanted to point that out, that the 112 trade, the 112C that I do, it's still the core trade. It is the money generator of this account. It is the core that everything else revolves around. It's only a portion of what I do. It's not 80% of the account or something like that. Anyway, and our modification, I think, has really paid off. So I love where I am with the 112 trade. So that's the number one trade in the account from a core strategy. The number two trade are these income poor man covered call trades. So why did we switch to them? Big reason was, instead of selling naked puts on SPY and laddering those out and having naked puts on ES and laddering lots of those out, okay, that was oversized risk, outsized risk, however you want to call it. Well, way too much risk on the portfolio when you ladder them out, and you've got, even though you can take losses in them individually at maybe 2%, not a big deal. Yeah, you lose five, okay, you lose 10%, not a big deal. But typically, if something happens extraordinary, things can blow through and really expand those volumes. So we simply just went the other way. So instead of selling the naked puts on SPY, I started buying leaps on SPY. And what that did was it allowed me to get longer Vega into the account. And then with the income permanent covered call version of that, I'm selling at the money covered calls, which is generating extrinsic value, but it's also okay, kind of reducing that long delta that we have as well. So it's keeping me very delta neutral. Let's jump back into the account here. So I just wanted to pop up and give you a sense of what that looked like, and then we can go back and keep chunking through these trades a bit here, and you'll see what I mean. We do have some Amazon, an Amazon trade on. We actually sold a naked put. That thing's down a little bit because Amazon has not performed well the last couple days. And we had the book and ring butterfly, the size small, that it's okay. Little spec trades there. Boeing, we did sell a naked put on it. Again, not to get assigned. I'm not going to wheel it. Not going to do any of that stuff. Just a naked put trade. So I do like naked put trades. I do not do cash secured puts in this account. I am not willing to take assignment in this account. I do not want to wheel things in this account. The only reason I would ever use something like the wheel in this account doesn't mean don't use it, okay? But it doesn't make sense in this account for me is I use it as a way to get into some of these income poor man covered calls. Okay, but I do it a little differently than everyone else is I don't want to take possession of the stock. Okay, and if I do get assigned the stock, I will immediately sell it and buy the leaps immediately upon assignment. Why? Because I want the leverage of the leaps. Okay, stock goes up 10%, you make 10%. Leaps go up, an 80 delta leap, you know, with the stock going up 10%, well, because you're paying maybe one third, one quarter of the price for the leap versus the stock, I'm going to get a 30% move in the leap versus a 10% move in the stock. So you get really 3x leverage by using leaps. Obviously, that can cut both ways. So you got to be smart with it and look at buying high quality assets that you think are going to move up if you're going to use those leaps. Now, I don't use a lot of leaps in here because I use those in my investing account. This is a trading account. Very, very different set of strategies are used in this account. So this Boeing is just simply a naked put trade. I have no intention of taking shares of this one. Bitmine. All right, so we've got Bitmine here as well. It's up 24% in 5 days. Not too bad. I'm not planning on taking possession even if I do get assigned, or I won't get assigned. I'll close it before that. But if I hit my loss, I'll stop out of this thing. I won't ride this thing to assignment. All right, let's skip gold, IBIT. Let's skip and hit Oscar Health. I really like Oscar here. We're up 30% on this one. Not a big trade overall, but we'll take the money. And then again, this is not a let's get assigned and wheel it type of a thing. This is a hey, let's make the money on the naked put, and we'll close it and we'll roll on to do something else down the road. And then UNH, same type of a deal. I'm not looking to take assignment in my long-term investing account, the lazy trader portfolio, as I call it. It's lazy trading for a reason. I'll put these things on, and then if I do get assigned, I'll flip them into a leap because these are on stocks that I do like. This is a trading account, so all I'm doing here is trading, but not bad. 3 days, 24%. We'll take that. All right, let's get into the income poor man cover call strategies that I have. We'll start with gold. All right, so we own a synthetic stock, which is my preferred way of playing any type of a leap strategy. Okay. Everybody likes to sell the 70, 75, 80 delta leaps. I prefer to sell a synthetic a synthetic stock position. What is a synthetic stock position? Very simply, you buy a long call, you sell a short put, okay, at the same leaps, okay, because they're 480 days out on gold here. You put this on, and it exactly equates to what a stock would look like. All right, so this is exactly the same chart of a stock. It drops, you drop one for one. If it goes up, you go up one for one. The difference here is the cost savings here is incredibly beneficial, right? So as opposed to spending $345, which would be just for 4 shares, which is what I did here, 400 shares times $345, it would take $138,000 to do that. However, because I'm using the synthetic here on 4 contracts, okay, I'm going to spend 33.80 on the long calls. I'm going to take in 18.20 on the puts. So it's going to cost me $15.60 times the 400. I'm going to end up spending $6,200 on this totally. Okay. So what would you rather spend? Okay. 300, or whatever it was 345, times 400. Would you rather spend 138,000 or would you rather spend 6,000? Okay. I'm going to take the leverage of gold here, and that's what I'm going to do. I also sell a protective put, so I don't get exactly 100 deltas on this thing. Because I'm selling, or I'm sorry, I'm buying this protective put, not selling. I'm buying this protective put, so my delta is a little bit lower, but it does give me more BP relief, even though I spend a little extra cash to do so. So I've spent totally about $19.40 on this. So really, you're talking like almost 8 grand, 7,760 bucks versus the sheer cost of buying the ETF or the stock. Okay. So I get extraordinary leverage on these. Okay. If I'm, again, upside, downside, you can see this thing is up not too bad in 60 days, 151%. But I'm also selling these at the money, calls. Okay. The at the money call is going to generate the most extrinsic that I can get out of it. And we'll take a look at how this thing is overall. Now, frequently on something that's trending up, these are going to go in the money. It's going to cost me cash to buy this back. But I wait until this extrinsic, and you can see there's $316 of extrinsic left out of 840. That's all good. Okay. There's nothing I'm going to do on this strike until I get to about 90% of the extrinsic is gone. Right. So that being said, okay, I don't mind spending the money to buy these back. As you can see, what do we make on the day on gold? Gold is running through my strike, but am I losing? No, I made $464. I still have positive delta on this trade. And these calls right now with 4 days to go, okay, these calls are sitting at roughly 80 delta right now. So I'm almost delta neutral in the position because it's gone in the money decently. But for now, I'm totally fine with that. We made 464 bucks despite going in the money pretty deeply here today. Now, yes, this is realized loss when I close it. This will be unrealized gains. Okay. And they can always turn around, but I'm always going to be generating the extrinsic value. So I'm going to get $840 on a $7,000 investment in 1 week. Okay, not too shabby. That's just the extrinsic part. If you do that week after week, month after month, okay, you're going to make incredible returns. All right, IBIT, same type of a setup. I do have this one. It's just the leap. Okay, now this leap is up fractionally. IBIT has not been a great performer on it, but you can see I was trying to roll some today. They didn't all get rolled, so I'm making really good money on these, even though I was at the money. Okay, we're now out of the money. due to the fact that this has dropped a little bit. So it's pushed my at the money out of the money. I can close these now, realize the full extrinsic, and then I'm rolling out. So you can see the first roll, I only got filled out of one out of the 10 so far today. So I'll have to do it again tomorrow morning. I just could not get filled all day long, right? But you can see we're rolling down, same expiration, and I'm just going to collect more of that extrinsic. Okay? Strategy, right? Now we're down on the leaps about 32%, but we have been collecting just monstrous, no pun intended, we've been collecting monstrous extrinsic value here. Uh, so we're going to take a look at this trade in just a moment. I'm going to show you how it's hanging in there overall and how all these things work together. So it's not in a vacuum that, oh, you just put on income poor man covered calls or, but you know, you've got the 1-1-2 trades, you've got the income poor man covered calls, you got a couple naked puts in here. You've got a little bit of a mix, okay, based upon my strategy of my list of strategies that I want to employ here. And then you've got some other spec trades like strangles and 1-1-2 trades. I tried to get a strangle on bonds today. It did not fill. 2 days in a row, no fill. All right, so strategy, keep an eye on that. I also sold a naked put, again, not to get assigned, okay, just to generate some cash, and that's up 45% in 11 days so far. Okay, Oscar, we talked about QQQ, same thing. Okay, we're up nicely on the leap here. We've also got a naked put running. This thing is at 94%, so it's really time to take that thing off. I did put this one on in the hopes that if the market did start to tip over, if we happen to get down here and I got assigned, I would add it then. I would flip that into another leap or really a synthetic long, and I would add it to this. And I'll just keep doing this until I actually get back in at a lower price. Until then, we'll just keep making extra cash. Okay? And then we're in good shape. We still have plenty of extrinsic to go on our trades here. And here are 3 different leaps that we've been selling. They're all up nicely over the last couple months or so, and we're generating great extrinsic value. Let's see exactly how this plays out. Here you go. Here's all 4 of these that I have running. Here's SPY. So if you remember back a second ago, we bought those 3 longs, 3 tranches. There's actually 4 total contracts of the long leaps, okay, for 47,000. Okay, we are now up 60% on this trade. SPY is only up 10%. We're up 60%. Now, someone will say, well, if you didn't sell the covered calls, you'd be up even more on the leaps. That is correct for this one. However, that's not the strategy. Okay, the strategy was just to generate cash flow, and I think 60% in 227 days is pretty good. That's 32 weeks. Okay, I've made $29,000 on this trade, 60%, almost 61% in 32 weeks, doing exactly what I want to do. Am I giving up some upside? Maybe. Okay. Do I care? No, because that's not the strategy. In the investing account, sure, buy the leaps. Okay. And if you want to write the poor man covered call out of the money, that's fine too. That's not the strategy here. I'm fine making 60%. Okay, let's look at the QQQ. Okay. We bought these at 13. Okay. They're actually up to 26, so they're actually up pretty well as well. But I'm up 62% here. $8,000 on 13 grand. I'm quickly approaching a 100% return, and I've only been in this 156 days, which is only 22 weeks. Not too shabby. I like this. Okay. It works great in uptrends like we have. It works even greater in sideways to even slightly downtrends. And let's look at strategy. Strategy we bought for 30. Okay. But the leaps are down. We've lost $10,000 on the leaps, but we've generated $17,000 by writing at the money and in the money. So we're now up 24% on this one in 113 days. Okay? That's only 16 weeks. 24% in 16 weeks on an asset that's lost a third of its value leaps wise, okay, and is down 10% stock wise since then. Okay, not too shabby. I don't mind. Right, IBIT. Now this one hasn't performed quite as well. It really hasn't done much of anything. Okay, we're up a little bit on the longs. We're also up a little bit on the covered calls. Okay, we're up 12% in 111 days. Again, not bad for 16 weeks. Not great. Okay, I mean, I don't think too many people would be upset with 11%. And hey, if you're buying covered call ETFs, you can do this yourself, people. You don't have to buy MSTX. You don't have to buy SPY-I or QQQI or IBITI, which would technically be BTC I as well. You don't have to go and do that. You can do these yourself, okay? And I can make great income for the year on these. So you can definitely outsize the returns of what some of these covered call ETFs are doing. And then here's gold. Okay, gold doing great. We're up 68% in less than 2 months. Now, is gold up? Yeah, gold's doing great. Okay, that's why I took gold as the one. Now, if in other accounts, like an investing account where the poor man covered calls the goal, then that's fine. Okay. That's not what I'm doing in this trading account. There's a big difference between what I do in a trading account versus what I do in an investing account. Very, very different strategies. Investing account, maybe more poor man covered calls, long leaps. I want the appreciation. Okay. And in a bull market, okay, you can get 2 to 3x to 4x returns using leaps. Leaps are magical. Okay, they're great in a market that's going up. Well, when the market's going down, you're not going to like your leaps so much. Okay, I'm giving up a little bit of the upside here on the income poor man covered call because I want that consistent gains that I'm getting. It's not shabby. I'm making 60% on my trades here in a handful of weeks, not even a year so far, and we're making a ton of money on it. When things go down, like you saw in strategy, I'm going to do even better. Okay. So everybody that's telling me, well, you're missing out on the upside because you're capping your upside. Yeah, I know what I'm doing. Okay. That's not the goal of the strategy. The goal of the strategy is to generate consistent cash flow up or down with the market. Now, if the market's going up, certainly that's nice. Okay. I will have to use some cash to buy back the in the money calls if that happens. It's okay because the underlying continues to go up. And if things reverse and they start going down, okay, then I will dynamically change my strikes based upon my trade plan. Okay. So sometimes I'm selling like maybe a strike or two out of the money, mostly at the money, sometimes multiple strikes in the money. Okay. All depends on the chart that determines what strikes I sell at. When mine starts to flip over, and if the market starts to sell off, okay, I will dynamically change the strikes of the covered calls. If you keep selling your 30, 30, 30, 30 deltas, but your stock starts going down 10, 15%, like it did in March and April of this year, okay, you won't be saying, oh, you're capping your upside. You'll be wishing that you had sold in the money covered calls, okay, where I'm actually protecting my downside and still generating extrinsic. I'll generate even more money in a sideways to down market because I'm going to generate a high degree of extrinsic versus the little bit that you get when you're out at 20 to 30 delta. Again, nothing wrong with a poor man's covered call. I do those, but it goes into an investing account. It's a lazy trader strategy for me where I just don't have to really think about it. And in an up market, my investments are doing great. Okay, but I'm a trader and I want to be generating that cash flow. That's why I'm doing this. So, bottom line, find what works for you. This is what works for me. Okay. The 112 trade, still one of the best trades out there. I love it. We're making money on oil. We're making money on gold. we're making money on ES on 112s. We've got the 112C. We've got the 112s. Those are doing great. In fact, my 112s on oil are up almost $9,000 this year, and I'm up several thousand dollars on other futures. Okay, I love the 112, one of the most versatile trades out there. Okay, you just got to be careful how you use it. Okay, there's always risks. Okay, but we stay consistent. Okay, I haven't changed my tune. Okay, in years, I'm still doing the same basic strategies of 112s, strangles. I've added the income form and covered call a little bit. Why? Because it helps me flatten out my Vega. It helps me flatten out my deltas a bit, and it helps me generate cash flow without adding too much extra risk to the portfolio. Okay. So I pulled it in a little bit more, even though I've been using it in my investing accounts for a couple decades now. Okay. Just tweaking things up. And my spec trades are still 112s, naked puts. That's primarily what I'm doing out there. All right. So hopefully this was helpful for you. If you got something out of this, click the like button down below. Help me out. Okay. Again, I'm just here showing you what I'm doing. The account's doing great. I love being on here. I love sharing what I'm doing. If you like it, great. If you don't, it's all good. There's plenty of other people to listen to out there, but I'm going to continue to plow ahead. The goal is to generate as much money as I can. Okay. Take some risks. Okay. But not get too crazy. Okay. And then hopefully I learned something, you learned something along the way. Take care, everybody. Have a great rest of your evening. We'll see you later. Bye-bye.